Inflation rears its ugly head again with another increase, but yet gold and silver remain resilient. We're going to talk about it and so much more in this video as we explore. A lot of excitement and volatility in the markets. Gold and silver are essentially, if you look at a chart, extending their middle finger to the economy and to Jerome Powell, to the Federal Reserve, and to inflation, even though in late trading they are down a bit. But, when we think about rearing its ugly head, we think about here, the head that's on this note is George Washington. Certainly, he is turning in his grave, and his head is spinning, thinking about what we're doing to the dollar. In fact, he wouldn't even want his face on currency. In fact, certainly not paper. As the Article 1, Section 10 of the Constitution says, nothing but gold and silver should be money. But, let's stop looking at the dollar. It's a losing proposition, even by design with the Federal Reserve Act. But what about these ugly heads? Yes, indeed, even though King Charles is in effect, he's not considered the most handsome fellow, but nonetheless, being on gold coins means that these are not something you would part with for sure, because gold is still trading at near all-time highs. It's back a little bit now. Here's your market report moments before the markets close. Gold is up or down 0.87%. I'm so used to it keep climbing that that language just comes out. It's up. It's down $20.50 to $2,333. Silver fell a little more though. It's down a full percentage point as of right now, down 29 cents. It is now back down below, but not by much, $28. It's $27.93. If you take a look at the chart through the trading day, it was a pretty radical and wild ride. Heavy volume that came in, smacking the prices down even more, and then spiking right back up again for both metals. And this big volume that we saw as people were anticipating the numbers coming out. So here is where the numbers are at. According to CNET, inflation took an upward swing in March, with prices rising 3.5% in the last 12 months, up from 3.2% in February, according to the latest release of the Consumer Price Index. Inflation's continued resilience threatens the chances the Federal Reserve will make a predicted 3 rate cuts this year. Now they're thinking maybe 2. Core prices, which exclude volatile items like food and energy, increased 0.4% in March, as it has in the past 3 months. With inflation sticking stubbornly above its 2% target and unemployment remaining low, the Fed is unlikely to lower rates until the second half of 2024, if at all. So don't expect a respite from high interest rates on credit card debt or loans anytime soon. I don't see how you can justify cutting rates with a job market that looks like this, an economy that is growing at a pretty good clip, and inflation is still running at almost 2% above their target, according to Gregory Haim, chief economist at real estate service company Brown Bear Stevens. According to this report, however, when you take a deeper dive into those numbers, it's not as rosy a picture as he's painting it to be, which is part of the reason why the Federal Reserve is walking a very, very fine line. Now, Jerome Powell said that the Fed still expects to make rate cuts at some point this year, but more likely analysts think it's going to be 2, and likely, based off of my prediction, it won't start until July. Now, we move on over here to another piece from Reuters talking about gold specifically, but it can be applied to silver too, just at a greater scale in terms of its losses. And gold prices have slipped from record high levels on Wednesday as the U.S. dollar and Treasury yields firmed against the stronger than expected inflation report. And that seems kind of contradictory, does it not? Think about it. Inflation rising, that weakens the value proposition of the dollar. But it's strengthened because they think that essentially that we're going to continue to see, this tightening policy taken into effect, which is going to bolster up the dollar. The dollar index is up 1.03%. That's a pretty big move in the upwards direction for the dollar index. It is at 105.16, which is why that gold and silver are resisting the urge to absolutely crash right now. That big spike that we saw earlier in the day, plus what we're seeing now with the prices only down somewhat marginally. It's not a bad drop. When you think about it, it is a noticeable drop in price, but for both metals, but they are very much resilient. And in fact, with the big spike that we saw earlier in the day, and we've seen this kind of volatility in the last several trading sessions, if not beyond that, more likely we may recapture those all-time highs yet again for gold, and we may see silver comfortably rise back up again. Let me give you an idea of range for where silver was today, for instance. It got up as high as $28.57 today, and it traded as low as $27.47 when the numbers first came out. But it snapped back, and now it's getting closer again to $28. It's only 7 cents shy of that number now. Gold had a very much the same kind of effect to a degree. $2,359.90 was the high. It got down as low as $2,318. Now it's trading at $2,333. So it's a very fascinating ride that we're seeing. But what can we expect here as we continue to move forward in this session and digest these numbers? That likely the worst is over for the volatility in terms of the market reaction to what's going on. Now everybody's going to be seeing and anticipating what the Fed is going to do and when they're going to do it. In other words, they're not going to do anything, and and if anything, there's any kind of action that's going to take place, more than likely it's going to be in July, which means we could see a little bit more pressure, or maybe this kind of activity and action that we'll see essentially silver and gold, stabilize at a certain point, a certain price point. That certain price point very well could be right around where we are at now, or maybe down a little bit, maybe $2,300 for gold, or the high 22s, 2,200 and some odd dollars. And silver, we very well could see it test $27 again. In other words, maybe even to the high 26 range as they navigate through this, as we anticipate the possibility of only 2 cuts instead of 3 this year. Now, I want to bring something else to your attention. There are several, and a growing number, in this community that I am taking very seriously, that think that the Federal Reserve will not lower rates at all this year. That is a possibility if inflation remains sticky. And so far it has, and it has climbed up a little bit. That means that more likely we could go through this whole entire year with no rate cuts. Because what's worse? What's worse? We're going to see good employment numbers and good economic data. With high inflation, they may test that, and keeping rates where they're at right now will certainly test that. They are riding a thin line here. They don't want to risk crashing the economy, and I think even another quarter-point rate hike at this point could potentially do that. Of course, that would also crash gold and silver, but it will definitely have an effect on the markets. The markets already right now are down fairly dramatically across the board based off of inflation being sticky. And so if we see any kind of worse numbers, I mean, you think about it, the Dow Jones is down over 1%, down 422 points. The NASDAQ is down about 0.85%, down 136 points. The S&P is also down almost a full percentage point. And the New York Stock Exchange and Nikkei, pretty much all of them are down across the board. So that is the situation we find ourselves in. If the next inflation report comes back and it is down, or inflation continues to rise and uptick at the same pace or rate that where it is now, especially if it's a surprise and it ticks up another couple of tenths of a percentage points month over month, watch out. And because if we see inflation tick back up to 4%, then that is going to mean that they're going to have no choice but to probably raise rates. And that's going to be very problematic for the economy. We're talking potential stagflation that could come in 2025 if they do that. Now, we also have to consider politics that come into play and where allegiances lie. If the Federal Reserve decides to go ahead and raise rates after the election, they may choose to do it a couple of times just to essentially make it look bad for the next guy. If the next guy wins, if that's DJT wins that election, we'll see. I would not put it past them, but the pressure will be on for them to lower rates to keep the economy going and stimulated up until then, or if the current occupant somehow wins re-election. We'll see how it plays out. But there's your market report for today. I don't see this dip lasting too terribly long. I think once we digest these numbers and there's a reaction, I think they're going to see prices stabilize and likely to the upside. It may not be by much, really, but I think we're going to hold on to above $28 silver, and I think we're going to see a gold trade in the $2,350 range, I think, if anything, to kind of hold the line there and solidify before its next move to the upside, which I think will be coming. There's not much that the Federal Reserve can do right now to stop gold and silver, at least to some degree and to some extent. I'm not saying they're going to go to the moon, although one can make a cogent argument that gold kind of already has. But again, adjusted for inflation, it still has a ways to go before it reaches its all-time high in real dollars. Silver, obviously, is going to be the play here, and I think that most people are the hedge fund managers and the big money that is going to be looking into us, buying ETFs. They are going to continue to look at it as an opportunity, and that's going to bolster silver. So there you have it. There's your market report for today. Let me know what your thoughts are in the comment section below. Hope you found this video informative, insightful, and educational. If you have, press that like button down below and subscribe to the channel if you haven't done so already. And I want to encourage you to please rate this video. Yeah, thumb it up, share it, and hold on.